how to spot a good pre-approval versus a BS pre-approval. My name is Terry. For those who don't know, Connect Mortgage Funding, I'm the owner and broker. Our company, we have Jenny, our processor. We have Sylvia, our loan partner. Alexis, our marketing lead. And Anthony, the latest addition, who just passed his mortgage test and will be licensed here in 1 more week. So thank you. And so I want 3 realtors who are here to, with a one sentence, tell me what you look for in a pre-approval. I'm going to call you out. We'll start with you. What do you look for in a pre-approval?
Fastest process ever.
Okay. Chris, what do you look for in a pre-approval?
Want the letter to say, or?
What do you look for? What's the main thing you want to make sure was done on your pre-approval?
Verified.
All right. And Jeff? Okay. So everyone could spit out a pre-approval letter. The banks don't really have, the brokers don't really have like a regulation as to what constitutes, or a legal form, what constitutes a pre-approval. So the truth is, the pre-approval letter is as good as the individual loan officer who is issuing that pre-approval. So what should be going down in a proper pre-approval? If a pre-approval was actually an official pre-approval, then 100% of deals would close. Unless there's a short value, unless there's something unique, the seller and the buyer agree to walk away from the deal. Otherwise, a deal should never be denied. So here's what's supposed to go down in a proper pre-approval. First and foremost, I would love if realtors, most realtors, what I think a good realtor does is they ask the tough questions to the loan officer that they're working with. So the assets, and asking what assets are they using? Not to get into private details, not to get into confidential details, but are they using a gift? Are they using a savings account? Are they using a checking account? Do you have this verified? A lot of times what I hear from the realtor side is, did you get the income, assets, and credit report verified? We say yes, and they say good. But I know I've done my job, but most loan officers, a lot of companies, they're not necessarily doing that job. So you could spot that yourself as a realtor if you ask the tough questions and actually have a full conversation, not just hearing what you want to hear, and not just letting the loan officer or the mortgage banker telling you what they want to tell you, but kind of grinding into the questions and really figuring out if they've really done their job. And if it's a good loan officer, you'll be able to tell, because you've done enough deals, you've done enough business, you've had good experiences, you've had bad experiences. You'll be able to tell from their responses whether it's legitimate or whether it's fluff. So very important that the asset questions are asked, the income is asked, where does the person work? A lot of times we say, is income good? Yeah, the income is good. Well, if I'm a realtor, I want to know, oh, the guy works at GM, the guy works at Chrysler, the guy works for his father, the guy works at, he's self-employed. These questions will help you to gauge whether the loan officer has officially done their job. Oh, he's self-employed? Did you take a 2-year documentation of their income? Because I know from experience that they're going to take an average, and if that average doesn't work, you run into a problem. So again, ask the tough questions. I would go as far as to ask, how far did the underwrite go in this deal? I want to ask a few realtors in the small audience that we have here, is anyone aware of when I say the word AUS findings, or DU, or LP? Are any of you guys aware of what that is? What's up, Joe? Nice to join. Thank you, sir. So this question, if the loan officer is not able to answer the question or is thrown off guard when you ask this question, then you know that the job was not properly done on the pre-approval. Because what this is, AUS finding stands for Automated Underwriting Systems. There's Fannie Mae, there's Freddie Mac. Every loan in the country, in the mortgage business, has to go through this software. Every underwriter has to push it through this software. So if the loan officer is not able to answer questions for you based off those items, the answer is they did not do a proper pre-approval. So again, asking the tough questions and kind of just kind of testing them. Just like if you're going to hire an employee, you're going to have a little interview process. Just kind of testing the loan officer so that you make sure that your client's not wasting their time and you are not wasting the time for yourself and for your seller or for your buyer when you are going to show them homes. So that's what I would ask a realtor to do, something that will save you a lot of time and money if you're not working with a loan officer that you had a good experience with. The next item that I'll add, a lot of people would tell me those questions are kind of, you can't do that because you're getting into confidential info. you could get details without getting into private and confidential info. Again, you just have a professional convo and you'll know all your answers from that conversation. The next item is going to be the latest tips and tricks that we've been employing to save time and money. So I've already said that the pre-approval is only as good as the loan officer that is issuing it. I don't even want to say necessarily the company, because right now I'm a small company, right? So I could control, we all know what's going on with every deal. Me, Jenny, Sylvia, even Alexis, who's doing our marketing, knows what's going on with our deals, whether they're approved, whether they're not. So when you become a larger company, it's not necessarily the company that's dictating the quality of the approval. It is the individual LO. So right now for us, it's easy, but if you're dealing with a larger company, it all comes down to that one person. So that's a very important thing to register. And the next question I want to add, or the next thing I want to bring up, is I've noticed a lot of realtors are, by default, not accepting FHA offers. So by default, their listing agent is no FHA offers accepted. So I think FHA gets a bad rap. I think that there's a stigma from back in the day, from the bad economy times, 2008, 2009, 2007, when FHA deals may have been different. But today, the truth is, if we were to pre-approve an FHA borrower at 3.5% down versus a conventional borrower at 50% down, which you would say, oh my gosh, conventional 50% down, it's a better deal. The truth is, we're gonna close the deal with the same efficiency, the same quality, the same speed, whether it's one of those two deals. It's not gonna matter. So my question to a realtor when they're saying we're not accepting FHA is, I call and I say, why? Is it a condo? No, it's not a condo. Okay, if it was a condo, if the condo was not FHA approved, we could figure that out by one search on FHA's website, then okay, we cannot accept FHA offer, we agree with you. But if it's an FHA approved condo, or if it's just no good reason as to they just don't want to accept FHA, you're kind of missing out on offers that would have worked for your seller, that would have worked for your client. You may have gotten a $5,000 higher offer, a $2,000 higher offer with an FHA deal versus a conventional deal. And you just killed that deal for your client because you said we're not accepting FHA for not really a spelled out reason. The only other acceptable reason to not accept FHA, there's two more reasons, is gonna be if there was an appraisal for an FHA loan in the last 6 months. If that value was short, then that value sticks. And if you're trying to get a higher value, then for sure you're not taking an FHA loan in that case. 6 months, after 6 months, you can do whatever you wanna do. The other item is repairs. So a lot of people are worried about their clients. They don't want to spend any money on repairs. We're not going to do it. My client's not going to spend $100, $300, $500. The truth is the most common repair that comes up on an FHA loan is the easiest thing in the world. GFI compliant power outlets, which is in any room where there is water, bathrooms, kitchens, and loose electrical wiring, loose, if there's the circuit breaker, the fuse box, it's loose. They're easy fixes. These are under $100 sometimes, under $500 sometimes. What I've done, what I advise every realtor to do, when I have a buyer that is FHA approved, I advise the buyer to pay up to, and this gets the deal every time, this is the truth, it's one of the tricks, up to $1,000 of FHA required repairs. The truth is, $100 or less is gonna, on average, $100 or less is gonna come up. If it comes up, we get our buyer in, they fix it, problem solved. 50% of the time, the seller says, hey, it's okay, we don't want to push this on the buyer. It's only $300, we'll take care of it. Thank you, let's close the deal. That's usually what happens. So I would hope more realtors are willing to accept FHA offers as long as they're doing the due diligence with the loan officer that's pre-approved the deal, there will be no problem on that offer. And next item, my favorite thing in a realtor is when the realtor is, obviously the most common statement from a realtor is I have the fiduciary responsibility for my client, and you do. You wanna get your client the best deal. But the best realtors are working as a team with the buyer, with the buyer's agent, with the mortgage company to get the deal to work. To be fair for everyone, of course you wanna get your client the best deal, but a good deal is when it's a fair deal for everybody. Everybody's making good on it. So those are the best deals. If value comes in short, hopefully the buyer and the seller meet in the middle. Value comes in too short, it can get a little difficult, but there are ways around everything. So in my opinion, a very good realtor is really working hard to work as a team with everybody and not just for themselves, not just for their client. We're gonna get to the final parts here. is how to properly choose your lender, how to properly choose your loan officer that you want to work with. The most important things are going to be communication. If you were to send a lead to your loan officer, to your lender, how long, what were the turn times? How long did it take for your loan officer to actually come around and say, hey, I have an update. Hey, I actually called the client, or hey, we set up an appointment with your client for next week, for next month, for tomorrow, for today. How long did it take? Did you, when you sent the lead, did it go blank? Did you not hear anything on the other end of the phone? Very important. Communication, turn times, and a big one for me is morals and ethics. And when I say morals and ethics, it gets into a part where a lot of realtors are playing the game of only working with realtors, or sorry, a lot of loan officers and realtors are only working together if someone's paying a referral fee. So this is a a part that's very, very touchy. One, the fact that it's not supposed to be done, it's illegal, it is immoral, it is unethical. And two, it is a disservice to the client. What happens with a realtor when they are working based off referral fees, you will find that your loan officer is sending out improper pre-approvals, which turns into wasted time, turns into wasted money, and that referral fee translated into less money, less benefit for everybody. So what I would say is look at a loan officer, look at a lender that is interested not in just doing a moral and ethical job, not just in doing a proper pre-approval for your client, but who is interested in actually growing your business as well as their business by doing actual stuff together, actual marketing together, using that money for actual things that would benefit both you and the loan officer as well as the client, your future clients in the coming years. Because any realtor hopes not to just be in it for 3 months, not just for 6 months, but for 5 years, for 10 years, maybe a full career for the rest of their lives. And working with the right loan officer with the right state of mind is gonna get you there. And the last item I want to bring up is going to be in regards to what we are willing to do for any realtor that we've had an experience with. When I say an experience, I mean we've closed 3 deals together. Once we've worked together on 3 deals, we know how you are, you know how we are, and we could kind of gauge whether we're a fit to work together. And for anyone that we mutually agree that we're a fit to work together, we're more than happy to actually spend marketing dollars, market your listings, market your brand, whether it's on our pages, whether it's on your pages, to get the name out there, to actually get money invested, to get more applications in the door, more clients ready to work with you guys and with us, to actually turn into a long-lasting relationship that turns into actual business. And before I get into my next part, I want to make sure that everyone give their business cards for the raffle, because we're going to raffle off 3 free appraisals. Everyone has done that? Nice. Okay. So the next part is, that's pretty much wraps up everything that I wanted to talk about. So the next part is I'm more than happy to do a Q&A for anyone that has any questions from your end as a realtor, from experiences that you may have had with any mortgage company, with us in general, any questions that you may have from the inside, any questions you may have in regards to pre-approvals or experiences that you've had throughout the process with a mortgage company, feel free to ask me any question. If anyone wants to take that mantle.
We're FHA.
Okay?
So they have the guide.
Yes.
The concrete, how the sidewalks are, how the vinyl siding is, the brick, or any of the foundation of the house matter. Besides the GFI electrical.
So they do matter, and the most common item that comes up is concrete. That's the most common item, because if the foundation of the home, and here's the truth, here's again a stigma against FHA, which is it shouldn't be this way. If the foundation of the home is messed up, that issue is coming up on a conventional loan, it's coming up on an FHA loan, a veteran's loan. However, it is easily solved. A handyman will just come and level. You don't have to redo the whole concrete, spend $5,000, $10,000. You level it out, close the deal, and then the buyers could renovate the concrete whenever they want to. Very easy fix. I personally have never let a deal go away because of a concrete issue, because it gets handled easily that way. It's when people kind of, when the mortgage company, when the real estate agent, when the seller and the buyer all kind of get a little worried about what's gonna happen, how are we gonna take care of this, someone has to come in and say, I know a way to solve this. And if someone comes in with that feasible plan that doesn't cost too much money, that leveling will cost $500 the last time I did it. It's nothing crazy. And that buyer is probably gonna spend that $500 once they moved in anyways to level it out so that their children don't fall on the concrete.
I lost the deal because of this. The seller didn't want to do the repairs. It's FHA loan.
Yeah.
They don't want to, we had a $3,000 repair job was like 6,000.
Mm-hmm.
Didn't want to pay it.
Yeah.
Didn't want to move forward. We had to break off the contract, mutually release the contract. Go on.
And that 6,000 was totally changing out the concrete. Okay. So I'm curious. I want to talk to you later to see if it was possible to be leveled out. It could have?
Could have. And I said that to the buyer.
Yeah.
I made the deal happen, but
Yeah.
they were just like, we don't want to deal with it.
Yeah.
You know, there was a reason for them to back out.
Yeah.
And they backed out.
Yeah.
They decided to go wait for a conventional offer that they already had waiting.
Yeah. Now, with that being said, if the concrete is bad enough, again, if it's like totally obliterated, that's coming up on any appraisal.
Absolutely.
Like if the appraiser is doing the right job, it's coming up as an issue that has to be repaired. So again, it's FHA it gets a bad rap. We have not had a problem. We got FHA offers accepted. We close those deals. We have to send a second appraisal out after those repairs are completed. Very easy. We're still closing in our turn times. Maybe a few extra business days added on because of the second appraisal and the repair. Very easily handled as long as everyone remains calm and someone is taking control of how it's going to get handled.
How about appraisal and rebuttal?
Those are difficult. Appraisal, so his question was in regards to appraisal disputes or an appraisal rebuttal is value. Okay, we had one today actually come in. We had one today that actually came in very short. Okay, but if it's like within 5,000 short, 10,000 short, again, I think within 5,000, 10,000 in today's market, because everyone's asking above real prices, it's very workable. It's very workable to get the buyer and the seller to agree to meet in the middle. Or someone goes all the way up or all the way down, but I don't propose my buyer takes 100% advantage, have them come all the way down. I don't propose the seller takes 100% advantage and the buyer comes all the way up. I propose it right away, meet in the middle. So, and it usually works. Now, if it's above 10,000 and you want to dispute it, my experience has been only 2,000, 3,000 increase in price. Someone has something to say. What's your scenario?
Remember the one that I disputed for us and I got it? I think it was like 5,000.
We got 5,000. We did get 5,000. Yeah.
I got 5,000.
The dispute process. So if we're on top, because only we could do the dispute. You guys, the real estate agent, the buyer, the seller cannot do the dispute. The mortgage company has to do the dispute.
Had to call me about VA, go through Tidewater, and I'm the one who bought it.
You had someone call you about VA what?
Tidewater, they invoke Tidewater.
Tidewater.
The appraisal's gonna come in low, they're giving you a chance to rebuttal before it hits the books.
Gotcha. Oh, okay. So what happened with that?
I sent them the comps and they approved it. It was Friday, I sent them everything Friday, Monday they said it's good.
What amount are we talking about?
Like, I don't know.
Okay.
They didn't tell me.
Gotcha.
It's VA.
I think that's an only VA guideline.
Yeah, Tidewater is VA.
Yeah, it's not a picture information. It's only for VA. And I come across that often.
Okay. I'm gonna want to know more about that because that one's a little new for me. I'm gonna want to know more about that. I want to answer. So to finish answering her question in regards to how long does it take? So only we could take care of that. Only your mortgage company could take care of that. And depending on how on top of it the loan officer is, it could take anywhere from 3 days up to 10 days. The ones that we have done have taken an average of 3 to 5 days to get the actual dispute response. Now, when you're disputing it, the appraiser naturally is going to be defensive. Naturally is going to want to stick with their value. The most common response that I've gotten is around a $2,000 to $5,000 bump. And that'll help, don't get me wrong, but you shouldn't expect anything crazy unless you actually have comparable sales that are really comparable to the home that the appraiser already did not include in the appraisal value, then you have a real shot. But they normally are pulling up the proper comps. You bring up, say, hey, why don't you use this comparable? They'll tell you this one is newer and it's sold at a lower value and it's actually just as comparable. So I'm sorry, but we have to take the most recent comparable. So you could dispute it, and again, you'll get 2,000 to 5,000, but you shouldn't expect anything more than that unless the appraiser is really out and wrong about it. Another.
Joe wants to say something.
Yep.
He's an appraiser also.
Well, as an appraiser, you can do a value dispute. But don't make it a stupid value dispute. If you got a brick ranch in Warren, and you want to tell me that it's worth $5,000 more to meet your purchase price, don't give me colonial comparable. Because you're just wasting my time, and I am not going to do it. But if you give me something within reason, that's comparable, that's in the neighborhood, that may be just more updated than the subject, then I can look at it and say, I can make an adjustment for condition, I can use that as a sale, we can make it work. But there's a lot of things that realtors don't understand. I carry both cards, realtor and an appraiser. So when you're doing your appraisal, there's guidelines as the appraiser that we have to follow. we have to bracket the top line, which means if a house sold down the street for $200,000, and I'm comparing it to my home, which is the subject, and I'm making my adjustments on my grid, if before adjustments, the highest sale I have was for $200,000, I have to stick to my bracketing. So I can't go over the $200,000 because then they're going to say that your home is superior to all your comparables. Find me a comparable that's equal to the subject. And sometimes it's hard to do.
Okay, but sometimes you have streets that, the values vary drastically, 200 to 350 on the same street. So how is that done?
A lot of times you got to go into the home itself. You're not going to be able to do a drive-by or a market analysis on a home in Birmingham because one house is a 3,000 square foot, draped in granite, beautiful, done up, and the neighbor could be the same size but hasn't been remodeled since the 80s. But it's Birmingham, and the dirt alone is worth the money. So you got to go in there and you got to be able to dissect what's real and what's not, and compare it apples to apples. Would I buy your house for $300,000 when I can buy your neighbor's for $2? Well, the neighbor is torn down, he's missing a kitchen, it's horrible condition, it's not in good shape. Then you make the adjustments for that. But it's challenging. But there are a lot of times that you'll get a purchase that's for $300,000, and the best I'm able to come up with on paper is $240. Sorry, I have to kill your deal unless your buyers and sellers can come to the table. But at the same time, it is what it is. So your sales sometimes are not caught up to what the market is. So a lot of times people refinance in the summer. That's probably one of the worst times to refinance on the appraisal side because you're dealing with values from the fall. At the end of the summer, you can piggyback off of the hot sales in the summer, and that usually carries you to get you that little boost. It's a little appraisal trip. And we go a year if we have to, but typically you try to stay within a 6-month range. But there's times you go a year. A lot of them.
Add 3 things to that. Number 1 is next time we'll invite Joe to be our appraisal panelist over here so he can speak. And then number 2 is, what's funny is, if the deal's falling apart, I would say do the dispute no matter what, because from our experience, and the ones that we just did the dispute, we got 2,500, we got 5,000. And if that's gonna be the thing that makes the deal work.
I've actually never got 0. It's always come back a little bit.
Yeah. Yeah. As long as you're sending in something that makes sense, because we're not allowed to just turn in the dispute. We have to turn in reasoning, justification, and other comparable sales that we feel like would justify the value. So it's an actual legitimate process,
We take the actual, I actually call them too, and I talk to them, and I tell them this is what I'm sending you.
Yeah.
Look at it with me, and I take the extra step on that too, and then they say, okay, we're gonna send this, and if they have any questions regarding what I sent, I answer those questions too.
I've had that. So the question Andy had asked was, have I ever had where the agent, one of the real estate agents said, hey, let's take it to another lender, order another appraisal, and let's see if we get a higher value. That does happen. And a lot of times it's going to come down to both agents and the loan officer together agreeing whether they should do that. It shouldn't be one person deciding that. Everyone's got to put in their 2 cents, say, do we believe that the value will be higher? If we believe it, let's do it. If we don't believe it, why are you gonna waste the time? Because it's going to be resubmitting the deal, the turn time start over, right? Yeah, now if you're dealing with a fast mortgage company, not to toot our own horn, but we're a fast mortgage company, you could get through that process fast, resubmit the deal and go through fast, but you're not gonna have that every time. And again, even with us, even though we're fast, we would have the conversation with everyone to see if that's something we should do.
That issue is because the realtor was actually selling their own home.
Gotcha.
It's never been an actual seller of their
Yeah.
home. It's been the realtor owning the home.
Gotcha.
So they always think their houses are way more than somebody that's lived there for 20 years.
Gotcha. So I want to add one more question to Joe, and then you had a question from earlier. What is the average when you get a dispute, the average bump that happens? What is the average in our area, in the area that you service?
There's no real set number, really.
Yeah, like just from your experience.
The only thing that I could tell you is when the dispute comes to my desk and they give me additional sales for comparison, I have to literally write all those sales in there and specify why I did or did not use those sales. That's like a rule. I have to do.
Understood.
Not just me, that's just the standard.
Yeah.
Industry standard. So yes, it's always worth a shot because you have nothing to lose.
Yeah. An example, and this is an example of good karma. This is 2 weeks ago. So we have a client right now. You know, the state of Michigan has the Michigan State Housing Development Authority, MISHDA, down payment assistance, up to $7,500. A lot of people, that program, as long as you're buying a home under, I want to say 230, 229, something like that, as long as they don't make too much money, they could get down payment assistance from the state of Michigan up to $7,500. For whatever reason, the state of Michigan doesn't allow brokers to do that program. Even though we know more about that program than the average loan officer at a bank, they don't allow a broker to do it. It's just the rule, right? So we have a client that was purely benefiting off that. That's what they wanted. We're pre-approving them. We're getting them set up. We're getting their deal done. Once they find a house, I'm going to forward them to a lender that does that program, and they're going to close because the person's my friend. The person's my client. He was already my client before I found out they wanted to do that. So we're going to finish pre-approving them so that I make sure that my client's going to get a home with no problem, whether we get the deal or not. Now, here's the example of good karma. That client, it was the same day. The day I told them, I was expecting something a year later, months later, a week later. The same day that I told them how it's going to work and when it comes time, we're going to forward you to another lender that takes care of this. The same day, his friend and his wife who are getting married, who are buying a home, $250,000 purchase, he sent them to us. And we have that deal pre-approved, and now they're shopping for a home. So yes, we will do that. And any good, moral, and ethical person will do that. And that's the question when I'm saying, when you're choosing your loan officer, you're choosing your lender, all those metrics got to be there. It's make sure you're taking care of the client at the end of the day. We're going to get enough business if we're doing a good job. Another question?
I disagree with you. Sorry. So a normal person would be like, oh, we don't offer this program, call somebody else. Like, they're not going to do everything that we just did to fully pre-approve them and then send them to someone that we personally know and trust to do their mortgage in Japan. Anybody else won't do it. They won't. To take the time and the effort, and I mean, I've been working on the deal for a while.
Yeah.
To get everything done.
It's been like a month. Yeah.
We're not benefiting out of it in our own pockets. Nobody can.
Because that needs comes to me that I've referred to a lender that I had a relationship with one way or another, and then they worked it for a minute, we'll call it, and then can't do it. And that was it. Died.
Yeah.
The person, got discouraged just because of my prospective buyer potentially disappeared. Sometimes they come back and found their own lender elsewise if they didn't want to listen to me to refer them to someone else.
Yeah.
A lot of times it was just a lost lead.
Yeah.
It's just kind of unfortunate when that has to happen that way because if you know you can't do something,
But somebody else could.
It to you,
Yeah.
you have a relationship,
Yeah.
whatever the case is, if you can't do it, tell me that and I can go elsewhere. Or if you know
Yeah.
that you got someone else that can do it when it's questionable or you can't,
Yeah.
tell me, because that makes a difference.
Yeah. There's only about 3 or 4 types of deals that we know are better with elsewhere. Only about 3 or 4 types. They're very rare. MISHDA is rare. The other type of deals I'm talking about, they're rare. So when they come up, we will either do what we're doing with this client and fully pre-approve them, depending on the level of relationship we have, or if it's something that we don't even necessarily know about that product, we'll immediately refer it out. But we know what those are, and that's what should happen. Because why are we going to stop you? Why are we going to stop the client? Why are we going to make somebody believe that they can't do something when they could? So I agree 100%. Agree 100%. Any other questions? Anything unique that you've ran into that you would like some insights on from the mortgage side before we wrap up? All right. Going once, going twice. All right, Alexis, you want to come and do the raffle we're raffling off with your business cards 3 free appraisals. So when you have a client that we are going to pre-approve, we will be covering their appraisal for them based off whoever.
Are you gonna pick? Just don't look.
Yeah, sure. All right. Yeah. All right, we got one for the Jeff and Amanda Kashat team. You will hold it.
Can I accept this? Is this
Yeah, no affiliation, I promise. All right. We got Andy, who's not here, but Andy Gappy, we got him. He had that good question about the home equity line of credit. We got him.
That one, yes. I'll get Andy's car. Oh, man, you had it.
I got, no, who is this?
Ursula.
Ursula. We got Ursula. So how many realtors do we have here? We have 1, we have 2, 3 and 4, 5, 6. We didn't get a huge turnout. What we're gonna do, every realtor that participated today, we appreciate you guys showing up. Every one of you have a free appraisal for when you guys have a client that we pre-approve. So just ship them over and we'll get it done.